You are bullish on a couple of sectors of the equity market that have seen a bit of a tough time recently. And I am referring here specifically to precious metals and energy. And in the case of energy, in fact, this is almost into bear market territory now, going back for a couple of years, if I'm not mistaken. But you are bullish on both of these sectors. So why don't you just lay out the case and tell us why?
So maybe I'll start with precious metals.
Sure.
I think I'm a lot more optimistic, frankly, than I was a year ago on the longer term outlook. And I think the short term is actually quite interesting as well. So maybe I'll start with the long term. The reasons are, first there's this big trend towards socialism being kind of acceptable. And as you know, gold is kind of a bet against bad government decisions and falling trust in the system. And unfortunately, that's kind of where we are with no way out, at least in the near term. Then you have, your record budget deficits and trade deficits. Normally, that's a good backdrop for gold. And of course, you have the Fed creating vast quantities of new money and negative real interest rates. I think the stock of debt globally now, it's trading at negative yields, is back at a record. And normally that's a very good backdrop for gold as well. And then the last thing I would mention is, U.S. institutions, I think, while they have expressed some recent sort of enthusiasm, are still essentially underinvested in gold. But at the margin, I think the psychology there is changing. So you've had quite a few well-known investors express conviction in investing in gold, and I think that gives cover to a lot of these institutions that don't have a position. And I think, for example, Russell, the consultants recently told their clients to allocate to gold for the first time. Even Fidelity is on board. So these are quite encouraging signals and expand the potential universe of buyers. In terms of the short term, as you said, we had a strong run into August, of course, and then we've been treading water, and actually we're now into correction territory in the industry. But to me, this really does look like a pause that refreshes, and that we're in a bull market that frankly is larger than what I would have anticipated in any time in the last couple of years because of the things I just spoke about. So I think the timing here is actually quite interesting. I mean, seasonally, gold tends to bottom right about now.
Okay.
In mid-November. I mean, that's just sort of background music. The fundamentals are much more important, but that's something to consider. The speculators who tend to move the price around have reduced their net long quite a bit, back to levels that are similar to May 2019 when gold had a big move up. And then the gold stocks are generally back at their 200-day moving averages. So you've sort of bled off a lot of the enthusiasm, and sentiment is pretty washed out. Mm-hmm.
What was the cause of the drawdown since August? Gold hit a peak there of north of $2,000 a troy ounce, and since then it's kind of declined quite a bit. What was the cause of that? Because the issues that you mentioned with the central banks and such, that's been around for longer than August. So what's happened?
Yeah, I mean, again, seasonally, gold tends to peak out in mid-September. Mm-hmm. And then correct into mid-November. So we've had that this year, and that's sort of a behavior of the market in bull market years. Beyond that, I can't really speak for any sort of fundamental change, between sort of September and October, frankly. Now, of course, early November we had the election,
right,
and we've had a bit of a change in market leadership in the very short term, which has basically penalized the sectors that had done really well year to date. Gold stocks being one of them, and so there's been some rotation. But again, I can't pinpoint fundamentals that would get me bearish, other than investors in gold stocks look to the price of gold for conviction, and when gold is flat to down, it saps enthusiasm very quickly.
Now we pick on gold, but actually, I'm just looking at the year-to-date chart here. I mean, back in January, it's trading at 1,500, and today, as we record this, is trading around 1878, 1860. And so that's still up about, can't do my math, but what is that, 30%? So it's still a pretty good run here for this year. And you think that this pullback here is a buying opportunity, potentially for gold. But again, we're talking more about the equities here. But is that a correct assumption?
It is. And I mean, one could argue that with this shift to value, as you know, the prospects for recovery improve on the back of vaccines, perhaps supports other more cyclically exposed areas, such as energy or travel, leisure, etc. So it's plausible that those sectors could do better than gold stocks,
right,
in the next period.
Sure.
But at the same time, I think as interest in the industry expands and it becomes slightly more mainstream, gold and gold stocks actually become more of a risk-on asset. And we saw that this year, frankly. And so I think they can do well along with other value sectors if that's the direction we're going.